Hi, and welcome to my video series focused on the technology trends in venture capital. I'm Joyce, and I'm part of the digital technology practice at Octopus, a global leading executive search firm. We work with founders and corporates to help them to attract and retain the leading digital talent. I'm delighted to be joined today by George Whitehead, Venture Partner Manager for Octopus Ventures. George, thank you very much for joining me.
My pleasure.
So it would be really interesting just to start off with, to hear a little bit more about Octopus Ventures' investment thesis.
Yeah, sure. So Octopus has around about 500 or so million under management. We're one of the largest venture capital funds in Europe, and our particular focus is on companies that can scale dramatically. We tend to start fairly early stage in a business's life, often when they're worth, say, less than 20 million. And we're trying to get companies that have the potential to be worth hundreds of millions, billions of pounds. So we're looking for these really rare kinds of businesses that are addressing a really significant market.
Brilliant. And I believe that you invest in people and are generally sort of sector agnostic. Is that correct?
Yeah, that's right.
So are there any sort of trends or qualities, characteristics that are emerging between some of your most successful founders?
Part of the premise of backing people and thinking of the team, the talent first, and then expanding it out to going, right, let's now understand the market. So when you look at a size, the sort of fund of our size, you'll recognise that actually if you've got 500 million or so under management, across Europe, it's very hard to find a specific sector that will have the quality and the quantity of deal flow to give enough opportunities for a fund like that. So being sector agnostic means that we can look for, we can be completely open-minded about the next super disruptive business and where it's going to come from. When we've looked at a few different companies, we've found that they tend not to be so simple as to be able to explain them in one way, to go, this is clearly a fintech business, or clearly a digital tech, or ed tech, or whatever it might be. They land in one sector and slice across a bunch of other sectors.
Absolutely.
And part of when we look at the talent, looking at the team, is we want people who recognise that, who recognise the skills that they bring to the table, and then they recognise the gaps. So number one, we notice that the really great entrepreneurs, they're brilliant at selling. They're brilliant at selling to customers. They're brilliant at selling to investors. But they're really good at selling to other entrepreneurs. They know about selling to the talent, to convincing the talent that they should come and join that business. They have this kind of magnetic quality of getting A-grade people to join them, to quit their super successful jobs in the likes of Google or wherever it might be, and to go, actually, I'm going to come and work for you, this little startup with massive potential.
Brilliant, fabulous. And so looking at a lot of the companies that you have in your portfolio to date, a lot of them have come to you, when they're raising a Series A, and you've really helped them to scale and internationalise from a funding perspective. What advice would you give CEOs when they're scaling their businesses?
One is to recognise that it's a different job when you're scaling a company. So when you're an entrepreneur, people are often really great at being entrepreneurs. They're great at that kind of enthusiasm and the buzz and having 10 people around the table who are the entire team, and they can create the culture, and the culture can be absolutely critical to their success. When it comes to scaling a company, things get more complicated. Corporate governance comes in, HR comes in, you've got all sorts of other issues to do with how do you scale the sales team as you move beyond just the CEO doing the sales, but delegating it to a sales director or a sales manager who's going to be doing these things. And it's very hard to get that right. And I think across the UK, we're generally pretty good at finding entrepreneurs and nurturing entrepreneurs. You'll see it in the proliferation of incubators around. But when it comes to scaling companies, that's the skill set that we're really looking for. People who not only can be the entrepreneur, but who can be the sort of person who knows how to scale a business.
Okay, good. And are there any specific qualities that require, that are required to help people do that?
One of the qualities is to do with recognising their own limitations. And one thing, when you work with lots of entrepreneurs, pretty much every entrepreneur I meet, I think, is brilliant. Because they're brilliant at being an entrepreneur, they're brilliant at coming up with these ideas, and they're amazing for having the kind of courage and commitment to going out and growing a business. there's always, whenever you meet an entrepreneur, they're brilliant, but ... And it's the but what? What are they missing? What's the bit they're missing? And some of them are aware of that, and they are a delight to work with because they recognise where they've got gaps and they're really open to filling them. Others don't recognise it, and that's where they get the problems.
Brilliant, thank you. And I mean, lots of portfolio companies and venture capital firms talk about expansion into the US market. I think that one of the things that Octopus has done, which is really beneficial, is they've actually invested a lot of time and energy into how you expand into Asia. And I think it'd be really interesting just to talk about a couple of your portfolio companies that have expanded into Asia and where you see the sort of opportunities and challenges.
Yeah. You're right to point out that both the West, so looking towards the US, is a massive opportunity for most portfolio companies. So if you were looking, and if you take the premise that I explained at the beginning of saying we're trying to grow companies that could be worth hundreds of millions, billions of pounds, you have to think, where's the market able to sustain a business of that size? And it's probably going to have to be a global opportunity. It's probably going to have some sort of access and input into the US. And when you look at where the acquirers are, again, the US jumps up to the top of the list to think who are the likely acquirers who can afford a company for hundreds of millions or billions of pounds. So the US is really important, and hence we've set up an office there, and we've got 3 full-time people there right now, and their only job is to help portfolio companies expand into the US. Now, what most VCs do is they have recognised that and are putting some resources and effort into helping companies scale in the US, but they're forgetting Asia, because Asia is more complicated and it's a little scarier. And if it's scary for us, it's super scary. If you're a small company with a small team trying to work out how to navigate Asia and which markets to go for, who to partner with, how to build up levels of trust. So again, we've invested an awful lot into getting expertise on the ground and around Singapore, Shanghai, to help navigate those waters and really just handhold companies through how to go about partnerships and potential acquisitions in Asia.
And how well has it been received by the Asian market? Because I know one of your venture partners is Chris Wade, who does a lot with that sort of strategy in mind. How well has it been received?
I think now there's a kind of a shift in how VCs are being perceived. There was a time where people went to the venture capitalists and it was purely for cash. I just want your money so I can get on and run the business. Now they're recognising there's a huge skill set you can bring to the table of scaling companies. And the real challenge is getting from this few million revenue to hundreds of millions of revenue. How do you do that? And so it becomes a really important reason of why entrepreneurs are choosing Octopus. Because they're not just saying it's the cash, but it's something else that you're bringing to the table. And it's tangible. It's real people who aren't just going to give floaty introductions, but are actually going to go, I'm going to roll up my sleeves and I'm going to help you achieve what you need to achieve.
Okay, brilliant. And you're also doing a lot of other things around the broader Octopus strategy. For example, you recently launched Octopus Labs, and you've incubated companies such as Octopus Choice, which I believe is a peer-to-peer lending platform. What was the kind of rationale behind this?
So, I mean, Octopus is a scaling company itself. We've got about 450 employees now, and it's growing rapidly. One of the things you'll notice in any company that scales is that innovation gets harder. It's really hard to keep that entrepreneurial spirit, the spirit that kind of got you where you are now, to keep that going when you get to a certain size. When there are 20 people around the table, the culture is easy to set. And that feeling of going, we can do anything. When it gets to a certain point, the kind of middle manager antibodies leap in and stop innovation because it's generally risky to do innovative things. What Octopus has been very clever about is thinking of ways to encourage innovation. And sometimes it's working with people that we're incubating to try and inspire this culture of innovation and openness. Sometimes it's just going, do you know what? We can fail. We can try things out and give them a go. And if they don't work, that's okay. And that means there's a real openness to experimenting. and really listening to customers to go, I think this might work. If it might work, why don't we just do it rather than talk about it? And everyone around the table should be thinking not of the reasons why we shouldn't be doing it, but of the reasons of how we can get this done.
That's fantastic. And what are the major trends you've personally seen in the last few years, and what are some of your market predictions for 2017?
I would say one phrase that's going to come up more and more is the word patient capital. And I think it's something that's just beginning to get on people's radars. Partly because the Prime Minister's announced Damon Buffini, who's going to be doing a review into patient capital. But it's something that's resonating with a lot of people. And I think it's resonating with LPs, with retail investors, and with entrepreneurs, where they recognise it takes time to grow really successful businesses. So I think one of the themes that we're beginning to see is a confidence in people, in investors, confidence in entrepreneurs, and a confidence in the government to go, do you know what? It's okay to wait longer to build really big businesses. Why don't we swing for £1 billion businesses rather than selling out at £100 million or whatever it might be? And that takes a new era of confidence that only comes on the back of success. So all the stepping stones we've had of a thriving angel ecosystem, of a growing, maturing VC industry, of super successful entrepreneurs who haven't just done one business but are coming back to do their second or third company, all of this accumulates to mean there's an air of confidence which I think will mean that patient capital becomes a theme that everyone will hear about within the next couple of years.
I couldn't agree more. And it also is great for the market because it means we don't have so many overinflated valuations.
Yep.
People aren't pushing as quickly for liquidity events, and LPs change their mentality around their investing strategy. Which I think is great, and then we can also encourage more entrepreneurialism across the UK rather than centralised towards London, which will be great for the ecosystem. Out of interest, we see a lot of angel investing in the market. How is the pre-seed market affecting Octopus's access to deal flow?
So I'm co-founder and chairman of the Angel Co-Fund. The Angel Co-Fund is a £100 million fund that co-invests with angel investors. So I've got quite an interesting insight into how angels are investing. It's been going for 5 years now. It's done 70 odd investments, one of the most active funds in the UK. And it's been very interesting to see the evolution over that 5-year period. What we're seeing is the sophistication of angels has grown enormously over that period. We're seeing that syndication of angels clubbing together to not just pool money but pool expertise is becoming quite normal. And we're seeing the round size increase dramatically. So the average round size for the Angel Co-Fund is £1.3 million. That's the round size that they're getting. These are angel-led rounds. So much larger than we ever anticipated. We thought there'd be a few 100,000 because it's angels. But actually, no, time's moved on. And angels are recognising that you have to give companies a decent runway in order for them to be really successful. And that maturing of the angel ecosystem has been extraordinarily beneficial to the wider entrepreneurial ecosystem, which in turn is perfect from a VC standpoint, from an Octopus point of view. This is exactly what we want to see. We want to see A-grade teams, well-funded businesses getting up to a certain point where we can then take them to the next stage.
Brilliant, fabulous. And Octopus had 2 very successful AI exits in 2016, SwiftKey and Magic Pony. I'd love to hear your views on what you feel some of the impacts that AI is going to have on businesses and consumers that perhaps they don't realise yet.
Yeah, sure. So, I mean, we've been lucky. We've sold companies to Amazon, we've sold them to Google, we've sold them to Microsoft, sold them to Twitter. So very few, and what this is sort of demonstrating is that there are certain sectors that really capture the imagination of very big corporates when they want to go about acquiring. And there are certain sectors where the UK is just standout brilliant. And AI is one of those sectors. So it's one that, as a country, we should be super proud of and really encouraged to see more of this innovation. One of the things, we are sector agnostic. As a fund, we don't mind where the business comes from. But as soon as you've had some success in a sector, it kind of, success breeds success. And so not surprisingly, we see a lot of artificial intelligence businesses. What I'm noticing now is that even if the company has virtually nothing to do with artificial intelligence, it's probably branded now artificial intelligence company. And it's quite hard to sort of dig underneath to find out where's the actual AI in this particular company.
If you put it in your investment thesis, entrepreneurs seem to think that they're going to just get granted an additional...
Yeah, that's right, yeah. And it goes through waves. You see these things. We used to see fintech used to be the thing to put in, and we've had ed tech, and blockchain used to be a thing. I generally see them as hype cycles. It's where you get a kind of a buzz of excitement around something, where every investor, every entrepreneur wants to get a piece of that action and wants to get a part of it. And AI is a little bit in that at the moment. Sometimes in hype cycles, it's a huge opportunity because there's real substance behind it. And in the case of the UK AI sector, there really is some astonishing talent. But there's an awful lot of froth that gets built up around it. Part of our job as VCs is to look through the murky waters to try and find opportunities that we really think are credible. When we're looking at that, number one has to be talent. And any investor who's looking at getting involved in the venture space, that's my advice. Go for talent first, then start looking at the size of the opportunity. And then you'll be all right. So this focus on AI is hugely important because there's undoubtedly a massive trend there and a huge opportunity if we can find the right people to back those businesses and run them.
Brilliant. And as Octopus Ventures, I mean, you have a fantastic portfolio, really spanning, the B2B and the B2C space. I mean, one of my favourite companies in the portfolio at the moment is TrialReach, which is an online platform transforming clinical trials by connecting it with patients. A prime example of how Octopus is completely sector agnostic, and it's all about how technology can impact a range of industries. I'd be really keen to hear sort of what companies in the portfolio you're personally excited about.
So it tends to be easier to talk about the B2C companies because they're the ones people relate to, but actually half the portfolio is B2B. But in terms of the ones I get excited about, almost every business we look at is aiming to change an industry. So the people I hang out with are extremely exciting people who are looking at doing extraordinary things. Kind of businesses I like businesses like Gray's. So Gray's snack foods, originally through the post. What I really like about them, they've been going quite some time now, is the fact that they constantly are iterating. They're constantly developing their business. There's never any complacency with that team, always looking for the next thing.
And they've diversified out of just, food, haven't they, into other categories now?
They've diversified in all sorts of different ways and diversified into new geographies and into retail and into all sorts of different spaces. And that's one of the key things I want to see from an entrepreneur is their ability to have this hunger for adapting and pushing their business to the next level.
And how would you justify that a Gray's or an Eve is actually a technology company versus a distribution business?
I spend no time justifying that. I don't need to. I don't really care that it's a technology company. I care that it's run by a grade management team and addressing a really big market. The technology tends to be an enabler. And that's the thing that crosses all of these businesses, that they're enabled by technology to scale at an enormous rate.
I couldn't agree more. Thank you, George. I've really enjoyed speaking with you today.
My pleasure.